Hello there, welcome. We're now going to have a look at Chapter 1. Okay, so we're looking at Chapter 1 of your study notes. And really we're going to have a look at an introduction to financial accounting. What it is you've let yourself in for by doing the F3 exam. Okay, and studying for F3. So the first thing we need to ask ourselves is, what is financial reporting? Well, financial reporting is the process of recording and presenting business transactions. Now, what we're really looking at here is we're recording and presenting historical transactions. Of a business. Okay, so we're going to have a look at historical transactions of the business. As financial accountants, we're very backwards looking. Okay, we don't look to the future. Okay, that's what you're going to do in F2. In F3, we're backwards looking. We're going to record everything that has happened and present it on a set of financial statements. Now, what we do is we record transactions of a business through two places, the day books and the ledgers. The day books are lists. So a transaction may be that you are selling goods to a customer and they're promising to pay you later. So you could have a list of all your invoices for a month, and that would be known and recorded in a day book. And then the transactions are posted to the ledgers. And we do that through a process of bookkeeping. Or double entry bookkeeping. Okay? So this is where we're going to learn about debits and credits and posting to double entry ledgers. Okay? So all our business transactions are first recorded in the day book to form a list, and then we post that list of transactions to the ledger accounts through a process of double entry bookkeeping. Now we're going to do that all the way through the year, and then we're going to summarise and present that historical information on a set of financial statements. And really, when we're presenting those transactions, we're presenting a summary of those transactions for that particular period. Usually, it's over a year. How are we going to present our transactions in the year, and how are we going to summarise them? Well, we have to summarise them and present them on 4 financial statements. The statement of comprehensive income. You might know this as the profit or loss account. Okay? Well, we're doing F3 and we use international accounting standards, and the internationally recognised term for a profit and loss account is a statement of comprehensive income. What we will be doing there is summarising all the income and expenses of a business for the year to find whether that business has performed well and made a profit, or performed badly and made a loss. Okay? So the statement of comprehensive income is going to have a look at the performance of the business for the year. We then have a look at the statement of financial position, a financial statement that looks at how healthy a business is. It's almost like a doctor with a stethoscope, okay, assessing the heartbeat of a business. How healthy is a business? Does it have lots of cash and lots of assets? Or does it have lots of liabilities and obligations to pay people? That's what the statement of financial position will look at. We then have a look at the statement of changes in equity, which has a look at the movement in the owner's funds in the year. So if you're an investor investing in a business, you would be interested in the statement of changes in equity, as you would be interested to see how your equity, how your investment has performed. Okay, and what movements in the profits of a business, etc., have happened in the year. Finally, then, we can present financial information in a statement of cash flow. Really, that looks at reconciling the movements between opening and closing cash balances between last year and this year. Cash is one of the most important, if not the most important, asset to a business. So it's important for us to explain in the statement of cash flow how well we've utilised our cash balances in the year. Now, of course, we're going to prepare these financial statements in F3. So we're going to see these presentation of financial statements in later chapters, particularly these first two. We'll see them in chapter 2. Okay, we'll see what they look like and how we go about preparing them. But for now, financial reporting is reporting your financial performance, your profit or loss of the business, and your financial position, the health of your business at each year end. Okay. Now, what sort of businesses would we need to present information for? Well, within the F3 syllabus, there's 3 main types of business that we may be asked to talk about, and some of these businesses you would be asked to prepare accounts for. Now, the first type of business is a sole trader. And I'm going to put a tick next to this because in the exam you will be asked about the financial statements of a sole trader. Okay. So in your F3 exam, you will be asked to prepare the accounts for a sole trader. Okay. But we need to know who a sole trader is first of all, don't we? So, a sole trader, this is a business that is owned and operated by one person. Now, what we say here is this is usually people, that work for themselves. So, people like electricians, okay? They go round, they see their customers, they put their own money into the business, and their own money is used to pay for tools and to pay for running their van or petrol costs, maybe even to buy the van. Their business is AZ Electricals, but they put their own money in, the sole trader, and they are responsible for paying any business debts. So if the sole trader owes money to a supplier, well, then it's the sole trader's own responsibility to pay that money. Now, if the business itself, AZ Electricals, does not have enough money to pay for that supplier, well, the sole trader, the owner and operator of the business, the electrician, is going to have to take money out of their own pocket and give it to the supplier. The sole trader is personally responsible and liable for any debts that his business enters into. Okay? So a sole trader is personally liable for any business debts. Okay? Because they are the owner, they are the business. They own the business, they are the director of the business, if you like. They do operate the business themselves. Okay? So it's one person, a sole trader. Okay? But the business, AZ Electricals, and the sole trader are the same, yeah? That one electrician is AZ Electricals. Okay, so the sole trader is the business. They put their own money in. Now, a common question I get asked is, can sole traders have employees? Well, yes, of course they can. Your electrician may have an apprentice or a junior electrician that they want to train up. That's fine. But it's only him that is putting the actual investment into the business, and he operates the business himself. But he can have employees if they so choose. So sole traders is what we most commonly see within F3 in terms of recording transactions and presenting them on the financial statements. Now, the next type of business you could see is a partnership. Now, it's interesting. A partnership, you will not be asked to prepare partnership financial statements. Okay. This is one of the changes that happened in the recent syllabus change. In F3, under the old syllabus, before November 2011, partnerships was included in the syllabus. You did have to prepare partnerships financial statements. But now you don't. Merely in this new syllabus, you need to know that a partnership exists and that you would have to prepare financial statements for a partnership in real life. You will not be asked to prepare financial statements for a partnership in the F3 syllabus now. But you do need to know that a partnership business does exist, and it is a type of business that you could see financial statements for in real life. So, we do need to know what a partnership is, and a partnership is a business owned by two or more people. Some of those people will be actively involved in the business, and some of those people won't. So a partnership is two or more people that get together, decide that they want to form a business and start a business, and they're all going to put their own amounts of investment into the business. Now, let's say that you have 5 people. These would be the partners, 5 partners. 4 of those partners may be actively involved in managing the partnership business, whereas 1 partner puts their money in and doesn't want to be involved. And that's fine. Some partners will be involved in the running of the business, some won't. But they all put contributions into the business and invest in the business. Now, you see this most commonly with accounting. Accounting practices usually are based on partnerships, but also solicitors or legal firms are commonly formed by partnerships. And each partner will all bring their own specialism to the table. You might have an audit partner who specialises in audit, another partner who specialises in tax, another partner specialising in financial reporting, another partner that just wants to put money into the business, and that's it. Well, that's fine. The key thing is, though, a partnership is 2 or more people. Now, in partnerships, usually partners in the business are the same thing. So you could have Allen & Co. partnership. Well, that would be all 5 partners. Okay? The business name and the partners are the same thing in the eyes of the law. And as such, the partners are legally the same entity as the business. Allen & Co., the partners, they're one of the same. And therefore, the partners of the business, all 5, would be jointly liable for any business debts. So any supplies that need to be paid in the name of Allen & Co., well, if Allen & Co., the business, can't pay it, well, the partners have got to go into their own pockets and put their own money into that business to pay their suppliers. Okay? So, the partners and the business are one of the same thing in the eyes of the law. Okay? So, partnership, 2 or more people, the business and the partners are one of the same thing in the eyes of the law, and therefore, if the business can't pay its debts, then the partners have their own assets on the line. They need to use their own assets to pay those business debts if the business cannot afford them. Okay? The final type of business that you would see in F3 is a limited liability company. And you will be asked to prepare financial statements. For a limited liability company. Okay? So you will be asked to prepare limited company sets of financial statements. So there's 3 types of business. Sole trader, you need to know about, and you need to prepare the financial statements. Partnership, you need to know that they exist, but you will not be asked to prepare financial statements for. A limited liability company, you need to know that they exist, but you also need to prepare the financial statements for a limited liability company as well. So let's have a look then at what a limited liability company is. Now, a limited liability company is a type of business that is owned by shareholders and run by a board of directors. So let me give you an example. My husband has a business called the Letting Agency. Okay. Now, what he did is he set up a company and registered a company name. Now, in the UK, we register a company name with Companies House. Okay. So we recognise the company name in the law. Okay. My husband, Mr. McDonald, he put his own money into the business, and the business would be the company, the letting agency. He would be a shareholder of the letting agency. Shareholders invest money into the company. But then the shareholders can then choose who they want to run the business on their behalf for them, the directors. The directors run the business on behalf of the shareholders. Now, the directors can either own shares and have an ownership in the company or not. Now, because my husband has a very small business, he invested the money into the company as a shareholder, but he also runs the business himself. He is the director. But he is not a sole trader. Okay, he is not a sole trader. Yes, he has put his own money into the business as a shareholder, and yes, he runs the business as a director. But what he has done, he has recognised the fact that the company itself, the letting agency, is a separate entity to him, Mr. McDonald. Okay. Now, there's many various reasons why someone would want to do that, which we won't go into right now. But what we're trying to say is that in the eyes of the law, the company itself is a separate legal personality from the owners, the shareholders, and the directors, the people that run the business. Okay? So there's many advantages, and I'll tell you one of the advantages is that if my husband defaults on a payment and he can't afford to pay his suppliers, well, I know that my house won't be on the line. I know that myself and my husband's assets will be fine because the business would enter into contracts in the business name, the letting agency. Okay? And in the eyes of the law, if a company cannot pay its debts, well, then the company can't pay its debts. It's not up to the owners or the shareholders to put extra money in to pay those debts. The business needs to be generating enough cash to pay its own debts. And if the business cannot pay its own debts, well, the shareholders, the owners of the business, will not be chased up for those debts. Okay? So when my husband enters into a contract, he signs the contract with his own signature, but the contract will be for and on behalf of the letting agency limited liability company. And as such, the person who is chasing us for that money that we entered into in the contract, well, they would be chasing the letting agency, not Mr. McDonald. And therefore, if the company does get sued, it's the company name that gets sued, not the directors or the owners of the company. Okay? So we've got to be very careful. The company itself is a legal entity in its own right, and therefore shareholders only have limited liability for business debts, limited to the amount of money that they invest in the business. Okay, so there we have it. We've looked at the types of business that we'd need to present financial information for. In our next video, we'll have a look at what sort of accounts we can prepare for these different types of business. Thank you.